This past Friday, the US markets were closed. It was Juneteenth. Meanwhile, Israel continued its strikes on Lebanon, which led Iran to once again close the Strait of Hormuz. So Trump's peace deal survived only a few hours. None of this comes as a complete surprise, so we can count ourselves lucky that the market only gapped down a few points in the overnight session and has already started to consolidate again. My name is Oliver Sparring. I'm head of trading here at TradeNeon, and as I do every Monday, I'd like to welcome you to our level of interest market briefing. As always, we'll look together at what our analysis of the S&P 500 looks like today, which key levels we have, and what we can generally expect over the course of the trading day and the week ahead. Let's get started after the intro. Before we run to the chart, let's take our usual look at the week's economic news and the key earnings dates to put the fundamental picture into context. The week starts off quietly, but Thursday brings the most important release, Core PCE, the Fed's preferred inflation gauge. Expectations are 3.3% year over year and 0.3% month over month, so still well above the 2% target. That's all the more sensitive because last week the Fed removed the rate cut it had previously priced in for 2026 from its projections, and 9 of 18 members are now even considering a hike again. Ahead of that, Tuesday's purchasing managers indices deliver a solid picture of the economy, but the real game is decided by the inflation number on Thursday. The earnings week is light, but it has two heavyweights. On Tuesday, FedEx reports as a global early indicator for the economy for the first time since the Fried spin-off, and here the outlook matters most. The real star is Micron on Wednesday. The stock has nearly quadrupled this year, driven by the memory boom around artificial intelligence, and its numbers are the litmus test for whether that AI demand is structurally sound or overheating. Around $20 in earnings per share are expected versus just under $2 a year ago. So the bar is set extremely high. Let's jump over to the chart and look at today's level of interest analysis. As always, we're currently in the overnight session and it's 3 a.m. Eastern Standard Time. As mentioned in the intro, the market opened with a slight gap down and immediately tested the upper edge of the Vanna Bear Zone at 7,535 points in the ES future. Unlike Friday, that level then broke and the market ran all the way down here to the triple confirmed level around the expected move. This area held for now and the market moved back into its range. Right now, the buyers have managed to break the previous day's VWAP closing price, so momentum is leaning slightly to the buy side. That said, I tend to expect a range-bound mean reversion day. The first clear bull zone isn't up until here between 7,600 and 7,650. To get into that area, though, the market has to take out a 5 times confirmed level, which would require quite a bit of conviction from the buyers. The likely reaction is an initial rejection of that level, which would make for an extremely interesting location for a possible short entry. If the market does manage to enter the bull zone, then Gamma will slow the price down here, while Vanna will have a slightly bullish effect. If the market then stabilizes within the bull zone, a pullback to 7,600 would in turn be a good entry point for a long trade. At the expected move at 7,625 points, however, I'd recommend taking profits rather than betting that the market will sustainably push through that level as well. At the latest up at the span interval, which coincides with the upper edge of the bull zone and a bearish leaning hedging lever from the SPY, you should expect strong resistance. To the downside, the situation is a bit more delicate. The upper edge of the Vanna Bear Zone at 7,535 still represents a nice support level for possible long entries, especially since it lines up with an important mark from the volume profile. If the market does manage to break sustainably below the expected move though, then we are right in the middle of the negative gamma zone. A look at the Volin dashboard also shows us that both the Vanna from the SPX and the cumulative Vanna from the SPY are negative. Implied volatility is currently low, but if it rises, that could lead to a strong acceleration effect, especially in combination with the bear zone. Selling by the market makers would be strongly accelerated here, and things can go downhill quickly once the price gets rolling. So, pullback to our levels repeatedly lend themselves to possible short entries here. The economic data mentioned for this week could trigger a sharper correction, but that's still a way off. For now, I consider a calm, range-bound trading day the most likely outcome, and I'd approach the first trading opportunities by looking for short entries in the upper price areas and long entries in the somewhat lower ones. And here, as always, our disclaimer: level of interest is a market analysis tool, not a signal provider. Please don't make the mistake of simply placing limit orders at the levels. Level of interest gives you the context, reinforces your daily bias, and shows you price areas of institutional interest. With level of interest, we can work out a plan for the day, identify perfect entry locations, and of course define no trade zones as well. The software does not, however, replace a clearly backtested and defined entry setup. We always want to combine it with order flow to define both the where and the what in trading. Where does it need to happen and what needs to happen? A statistically proven backtested setup with a clear edge is therefore always a prerequisite for working with level of interest. And that's it for this week. I hope you enjoyed our little market assessment. Feel free to leave a thumbs up and subscribe to the channel so you don't miss any more analysis and trading related information. You find more information on level of interest and our other software offerings on our website TradeNeon.com. I wish you a successful trading week. I look forward to your questions and opinions in the comments, and if you like, we'll hear each other again next Monday. Take care and good trades.